Hello traders, it's Chris from daxtrader.co.uk. This is another video strategy tutorial for how to trade the Bollinger Band and RSI Divergence strategy. And this is for the German DAX, and we're going to run through a few live examples replaying the last week's worth of data. Okay, what you're going to need for this strategy is the following: a 1 minute chart, a Bollinger Band indicator set up for 600 with 2 standard deviations, RSI indicator with 14 periods, just the standard settings. Okay, what we're looking for is bullish divergence below the lower band or bearish divergence above the upper band. Now, RSI divergence is a tricky one. It takes a little bit of judgment, but essentially what we're looking for is a higher high in price, a lower low in price in this case, followed by a higher low on the oscillator. All right, so price makes a low, but the oscillator is actually higher than the previous low. And it'll be the other way around for the bearish divergence. Price makes a higher high, so it spikes higher, but the oscillator is actually coming down. That would be the divergence we're looking for, regular divergence. Now, the divergence needs to have 2 spikes in price, and they both need to be outside of the Bollinger Band, either above or below. The first spike that we use to measure the divergence has to be either overbought or oversold, depending on which direction it's going. And ideally, there's a bit of a retracement in between the 2 spikes. All right, so what I mean is you've got your first spike, bit of retracement, bit of space, second spike. Okay. Drawing lines all over the place. Second spike. So that period of retracement is what I mean. And it'll be the same for the other way around. That's outside the bands, and if it was the bullish divergence, then we're looking for something, a bit like this. Okay, bit of a space in between. All right, the other things just to be aware of is that we are looking to target a minimum of 3 to 1 on every trade. We're targeting the center line with our profit target, and we're risking 1% maximum of the account on every trade. Okay, so let's jump into it. Let's see how we get on. So we're going back about a week or so ago. We'll just press play, see how it ticks along, see if we can find any opportunities to trade. So each time we get a spike above the Bollinger Band, we're going to measure it out as spike 1 and spike 2, and we'll have a look. Sometimes as price kind of fails to show the divergence, we can kind of delete the labels of spike 1 or spike 2. All right, so that's going to be called for now spike 1. All right, it's a spike above the Bollinger Band high, Bollinger Band upper line. Small period of retracement, that could work. Let's see whether we get a spike above it now, or whether this is just, yeah, I think, okay, fair enough. It's pretty much dead. All right, so we've got a spike below the Bollinger Band here now. And we're looking for at least an RSI of 30 or lower, which it has. That's good. Now, we have got a lower low there, and there isn't much of a space in between, but you'll notice that the oscillator has not created a higher low. It's actually got lower anyway, so that is not divergence. And what I might do is just shift that one across. And in fact, price has actually continued to forge another low, but it's all part of the same move for me, and that isn't divergence. So we can ignore that. Price has now moved away in the opposite direction. And I think that particular example is now gone. So we'll keep moving it. Keep moving along. So this has been trading away for most of the morning into the early afternoon now of the 20th. Nothing's coming up at the moment. It's a patient strategy. You probably get maybe 1 signal, maybe 2 a day, probably at the most. But they're pretty high probability trades. So this would just be in addition to any other strategy that you might use. Let's see whether or not we get anything on here. Right, okay. Well, that's definitely a spike right there. and the RSI was over 70. Let's see whether we get a higher spike now. Okay, well, that's definitely a higher spike. Would you agree? Closes above the Bollinger Band, getting a spike on price. So you'd probably then look to sell that. The difficulty is deciding where you put your stop loss here. So you probably want to give it a little bit of space. And then you want to target the center line. See if you're not, whether you get 3 to 1. Just about. So we could sell that and look to target those levels. If this wins, we'll win 3.36 of our account because our lot size will be dependent on the percentage. If we lose, we'll lose 1%. So it's not sure at the moment, but it's continuing to move. Now, what you probably would do at this stage is start deciding whether or not you want to change your stop loss to the, your profit target to the center line as it starts to move away, or whether you want to hold and just leave it as it was. You might also want to decide whether to move your stop loss to break even and at what stage you do that, perhaps once you break inside the band. But either way, let's assume we did that. Collapse the risk on the trade. And we might get tagged out for 0, and if that's the case, then so be it. No, there you go. Better than a stop loss, though. So that's a 0. No harm done. So what we can then do is move on to the next spike. So we originally had that as spike 1 and that as spike 2. Sorry, no, we didn't. We had the first one as spike 1, this one as spike 2 here. So then you would think you need a period of retracement. I think at this stage, you probably say that the move is gone, so you would just look for a new spike. And I think that is the spike right there. And you got a second one there. So you could, and it's quite aggressive, but you could short another one there. And if that does get stopped out, maybe there's another opportunity. Let's have a look. But that is divergence. So you could sell that. You'd maybe put your stop loss somewhere here. Let's give it a little bit of room. You're getting about 5 to 1 on that particular trade. Let's see how it plays out. Stopped out. No problem. So we're at -1 for that. But what we do have here, well, I mean, that is a spike, isn't it? So we'll see whether or not we get a new spike. So we've got a small period of retracement. That's good. If it falls away from us, then it falls away. It's one of those things. But if it does pierce the previous high, which it did, and it prints divergence, which it has, then you could be aggressive and sell it again, which we will. And this one is, well, you could probably cut the stop loss a little finer, but you're going for about 5 to 1 on that trade as well. So you'll notice that that was a loser. So we'll just mark that there. Our running total is -1%. Let's see whether or not this one plays out, or whether it stops us out again. We took a break-even stop earlier because we moved it too early. Or did we? You know, maybe we saved ourselves some money. This one's trading sideways, so perhaps you could start using your swing work. Maybe you'd start, what are you, 25, 26 points in profit? Probably would be happy to collapse risk. And what I've noticed here is that this one should be down there. Maybe we did stop that a little off too early, but we'll see. So you can start looking at your swing work just to find out what's actually happening with price action as to whether or not that price is making lower lows and lower highs. And if it is, then you can still be comfortable staying in and sitting on a trade and just letting it be. Once it starts breaking out its minor trends, then you can start to think that, you know, maybe the trade is in trouble and maybe take profit early or something like that. There's an example, although actually it went to profit target anyway, but there's an example that the center line actually increased. So it started rising. So you could have moved your profit target. So you've got to use your judgment on that one. But this one turned out quite nicely. It hit its target. So that's 5.2% added to the account. So our running total would now be plus 4.2. Happy days. Didn't want to print the percent sign. Okay. So maybe we can now look for another option, see whether or not we get another opportunity to get into the trade. It's nice to be in black. And this is all within the day. So 3 trades out of that. 2, well, one was a loser, one was break even, and one was quite a nice trade, 5 to 1. Add an extra 5% to the bank. So it starts into the morning on this one, and we're still inside the bands. We gapped higher, which could maybe give you a clue as to the direction. You're going to look to probably close the bands during the day. You can, again, still continue to mark out your swings and keep an eye on what the direction the market is doing. This has gone past the gap, and it looks like it's trying to pierce this band to the downside. So you'll notice that we've pierced it, but we haven't closed below it. So therefore, it doesn't count. It's got to be outside the band, like that. So we'll just mark that one out as spike 1. Okay. Bit of a period of consolidation. Well, there isn't really much. So I can't really call that consolidation. And unfortunately, that isn't divergence anyway, because the oscillator has made a lower low. So I'd probably mark that one out as the low. See if we get a bit of a retracement first. I mean, that's really tenuous. I don't know if I'd class that as divergence. I don't think enough time has passed, really. That's all still part of the same one for me. So I'll just leave that. And if it goes off to target, then it goes off to target, so be it. The oscillator is increasing, so you could do that. But you're not getting 3 to 1, so yeah, I'll leave that. I'll just continue. I'll just mark that out as spike 1. Let's see. So there's the retracement. If we get a lower low here, that'll be interesting. But you know, if it runs away from us, then so be it. Okay. Did it actually get lower? No. Well, that did. Let's just check on the divergence here. Is that close enough to still be classed as divergence, I wonder? It closed outside the band. It is a lower low. I think we were actually going way back here, were we not? Oh, yeah, it was. Way back there. So it's definitely a lower low. And the oscillator was below. Now it's above. So you can buy that. Let's just get a reward in there. So it's just a little bit below this. Probably cut that in. Just a tick or so below the previous low in here. Let's see what we get. Wow, pretty much 5. Let's just round it up by making it a little bit higher than the median line. Let's move these levels and see whether or not we get there or whether we get stopped out. Okay, so adjusted the levels. That's quite a nice reaction. I don't know what stage you'd move your stop loss, but let's just assume we did it here. Move it to break even. And maybe you just get turned around and get taken out here. I'm trying to move this one over. Okay, it's hit the median line, but it didn't hit our target. So that's a shame. Never mind. If it turns around now, that would be really harsh, but yeah, it's one of those things. Sometimes it's just good to I was going to say sometimes it's good to just trust the initial signal or the initial trade. In this particular case, it worked out perfectly. So you hit another 5%. So we're up to 9 now. Not bad. Not bad. All right, so we're on to the next. Just keep watching. Keep letting it tick away. Whenever you're in the middle of a Bollinger Band, it's just nothing. There's no point in trying to trade this. You could start looking at your swing work, looking for other reasons for maybe to get into a trade. Start using your forks. This sort of activity is quite a good thing. You know, it's different altogether. For example, this one, if you were to take a little fork from there to there, that's how prices retrace back up to the median line. These sorts of things are really good to know. But we're not looking at swing trading at the moment. We're just continuing on with this strategy. So you'll notice we had a spike here, but we didn't break the line. So that for me isn't one that we can mark out. So we just got to continue to watch this. As it starts to wind down to the twilight session, there's not a lot happening on this one at the moment. So the good news is, in the space of a couple of days, we bought ourselves quite a few stop losses. So we can be wrong quite a lot and still be doing okay. Right, there's your first spike. Okay. And now it's in the evening, though. Would you really want to trade in the evening? I don't know. We have bought ourselves plenty of stop losses. I don't think that's enough space between those two spikes to class that as a trade. But, you know, if you were bored or wanted to do something, you potentially could take that trade. And let's see if you get 3 to 1. Just about. Okay. Not saying I'm a big fan of that one, but you can do it. What time are we? So that is 7:25 at night. 30 points in profit. So let's just collapse that risk, get it to break even. Now it's completely risk-free. It might even hit target. It did. Unbelievable. Okay, so that's 3.8%. Add to the account. So that would make it, add 3.8 to that. 13. Let's just round it up to 13%. That's not bad at all. I would have been a bit skeptical about taking that, but you know, he who dares and all of that. It feels like it's not even that much risk either sometimes because they're such good probability trades. And the other thing to, of course, bear in mind with this sort of style of trading, right, bear with me, because the new day has started and we're already below the Bollinger Band. So it's pretty much straight into the action, which is good. Don't like trading within the first hour normally, but we'll see what goes. Let's just mark this low out just so I can keep an eye on it. And let's just shift this chart over a little bit maybe. See whether we break that 345. Right, well, there you go. We did. All right, and we've come back inside it. So that's pretty much what we're looking for. Let's see if it's divergence or not. There's quite a lot of space in between the two. That's good. There's a low there, and it is, yeah, that is divergence. All right, let's check the reward to risk. So we're probably getting about there. 4.3 to 1. That's good. Buy it. Move the levels. Probably want to move after 30 points, let's say. We'll move it after 30 points. We'll just tidy up these lines here. assuming it gets 30 points into profit, of course. Well, it did 36 at the moment, so we'll just move that to profit. Risk-free trade. Happy days. We might actually, yeah, never mind. So we got snagged on that one. So we'll stay as it is. Move on to the next. So we are below the Bollinger Band, but it's not a spike because we didn't take below 30. Well, we did there. All right, so that's definitely a spike. Let's go and see whether or not that's another spike. Is it divergence? No, because the oscillator is also lower. So I would probably class that as spike 1. Let's see whether we make another low. Or whether or not it just continues to move on. It looks to me like it's retesting the top of this valley. In fact, it's breaking through it. Okay, fair enough. That's definitely not going to be another new low there then. So we'll leave that and we'll go back to the next one. Whichever spike below or above will be the new spike. Okay, so 3-to-1 reward to risk. The reason that's so important is because it allows you the opportunity to be wrong more often than you're right and still make money. If you lose 3 trades and win 1, you'll break even. And if you think about that, that means that you only have to be right 25% of the time to break even. So if your strategy is 35% or 40% win rate, then you're profitable, quite comfortably profitable. So that's the goal. That's the when they say there's no such thing as a holy grail system, no, there isn't. But if you can understand your probabilities and understand the statistics and your bankroll management, then that is what makes a strategy successful. So I'm using 3-to-1 on every trade, but actually nearer 4 or 5-to-1 on this particular one, which is great. But 3-to-1 is the minimum, and 1% risk is the maximum. I don't care about how much I'm risking per point. It's just how much of my account I'm putting on that trade. How much is it going to cost me if that stop loss gets hit? And the other way around, how much then will it earn me if the if the trade comes in? Right, what do we got here then? So we've got a spike there. It is above 70 on the RSI. Let's see if we can get a bit of a retracement. No retracement. It's just continued to move. So actually, that is probably the spike that I'd use. Oh, actually, is that divergence right there? Unfortunately, I've missed it. So I might, I don't know, maybe order. I don't know if you could do that. I suppose you could do whatever you like. What I was thinking out loud there is just saying I've missed the opportunity to get in on this one because technically that is divergence right there. It's not the best looking divergence, but it's lower high on the oscillator, high on price, outside the Bollinger Band. Ticks all the boxes basically, apart from there wasn't much of a gap between the 2 spikes, no retracement. So it's not the prettiest. But because I've kind of missed it, I'd be waiting for a retracement back into here. So I wonder if I can just put in a sell limit order there. That's pretty aggressive because you'd imagine if it retraces back up to that level, there's a high chance it's just going to pop out the top. So let's just go for 0.5% on this one. 0.5%. Just missed it. Look, just missed it. Should have actually had that lower. Oh well. Happens in trading, I guess. It's happened to all of us. We've missed our trade by 0.5 point or something like that, or a single tick. It's hit our stop loss by a single tick. That's annoying. So we've missed our entry by literally a tick, and I think it's going to go down now and hit target. Nah. Oh well, never mind. You'd have probably moved that to break even if you were in that trade, and Well, it hit the median line, which is kind of to be expected, but didn't quite come down to as far as the target line was. Right, okay, so we're into a new day here now. The order was actually still open, which is, oh well. Because we've gapped higher, it basically filled the order from what I was looking at here. And I guess in reality, what you'd have probably done is towards the end of the day, you'd have just closed that order out, or that order would have expired or whatever. But so we'll ignore that for now. Let's just deal with what we've got here. Can't really class the first one as divergence because we've got higher high on the oscillator as well. So I'd remove that first one and I'd call that spike 1. A bit of a retracement. Look at that oscillator. Look what it's doing. I might just take the candle bodies for this one rather than the wick. Bit of judgment on that one. But I don't know how much space to give this as a stop loss either. But we're looking at about 4.4 to 1 if I did that as a trade. Let's go for it. All right. It could well just get stopped out. But we'll see. Let's just get rid of that guy. Let's see how this comes in. So it's back inside the band with a nice wide range bar. That's good. Okay, that's good. So it's starting to trend. Well, I think we can safely move our stop loss to break even there. It's definitely not great when you get them turn around when they're so close to target down here. I mean, what we've like 45, 50 points in profit. And then it turns around and takes you out. I mean, that is really bad. I hate when that does that. But, you know, points don't really matter that much to me because I'm trading a percentage of an account. I'm not trading it €5 a point on every contract. I'm using a CFD account and I can change my lot size. You can use this on the FDAX Mini. I probably wouldn't do it on the full DAX contracts because you'd need a pretty decent amount of a margin account in order to handle €25 a point on this particular strategy, or more. But it definitely would work. Well, I believe it would possibly work, but I don't have a couple of million to trade with. So yeah, this one's currently sat on 88 points profit, which is good. But really what I'm looking for is for this to come and hit the target so I can add 4.5 or 4.45 to the account. And I'd be disappointed if it hits my stop loss at break even. That would be cruel. Anyway, we'll just move this along. I probably will trail my, no, I won't. I was going to say I'll trail my stop loss, but I'll just leave it. Set and forget. And if it hits break even, then it hits break even. So what? It's one of the biggest mistakes that traders tend to make when they do this kind of trading strategy is they look at how much they were in profit and compare it to how much they're now not in profit. And then they start getting emotional about that. And even if you took it down to like a single point away from target and then it moved away and came to break even. I mean, yeah, you could say that a trailing stop is the way to protect your trades. And if you want to do that, then that's fine. But I look at this as a simple set and forget type strategy. If you weren't at the screen looking at it, you wouldn't have known one way or the other. So set your levels and just let it be. Okay, I'm thinking that this one may well just go and take out a break even because it's kind of trading sideways. We're moving into the twilight session. And I haven't really got a conclusion to which direction this is going to move, so we may just let this one go. It's still trading within the bands. You'll see the Bollinger bands are starting to close up a bit. Maybe we should move this along a little bit. Unfortunately, it took it out. All right, and now we may have another entry to get in here because we've got that spike and that spike. The first spike was above 30. The second one is close. I don't think that's good. I think they're pretty much level. So, however, if you used that as the spike, I think I'm looking for things that aren't there. It's also 8:30 at night on a Friday. So yeah, I think that's a certainty. I would not take that trade. I'm not leaving a trade open over the weekend for a Monday. So I would have sold that otherwise, but because it's Friday evening, I'm not going to take that trade. I'd have finished it sort of afternoon on a Friday. So we'll move on. Actually moved a little higher anyway, so possibly would have taken out our stop loss. Well, that definitely would. Okay, so that's Monday. So we're on to the new one. So we are above. So that is a spike. I'll mark that one out. I'm sure you'd have probably done the same. You wouldn't have traded at 8:30 on a Friday night. All right, so we've got our first spike. First thing, ideally, we don't want to be trading within the first hour. So we're looking for this to retrace a little bit. I don't really want to see another spike within the first hour. But if we do, we'd probably take the trade. We're looking to break that high. That's definitely a retracement. All right, okay, with that, just mark that one out. It's just about lower. That's on the borderline for me as far as divergence goes. It's a flat line though. So I'd sell that probably 0.5%. I don't really love it. Put stop loss up here. Sell that. Get about 3.8 to 1. We're only risking 0.5% on this one though. Okay, stop loss was there. So that's 0.5% on that. We will take that down. Where's my balance? So let's just round that up to 4. We lost it. We risked 0.5%. So we lost 2% overall. But is that another opportunity to take this? And I think it is, because that is still above. And that is lower. So that still ticks the boxes for me. So I'd probably have another go at that. And if I don't get it, then I'll just walk away. 2 trades in a day is fine. If it doesn't work, walk away. So probably want to give it a bit of room. All right, we're going to go for about 5 to 1 on this one. Excuse me. I'll just move this out of the way. About 5 to 1 on that. If it doesn't work, we'll walk away. It's having a go. I got close. I think, I don't know. I don't think I'd move my stop loss so quickly, actually. What I do need to do is move my target down to the correct place. There we go. So a bit of a loss on that one was unfortunate. And the previous one, we'll probably move our stop loss now, though. It looks comfortable. It's trending down. Got to break that little low here now just to confirm that this mini trend is still intact. Otherwise, we're at risk of losing our gains again. See if we can hold above or hold below this, break this little low. That would be really good. Yeah, okay. So the mini swings are intact. Keeps this trade in place. Let's just maybe speed this guy up a little bit. Speed him up again. Oh, it's getting close, isn't it? It's difficult to kind of not just get out of the trade too early, but you got to set to it, stick to your guns. And as it's moving away, right, excellent. I didn't say how much I was going to add to the account then, so well, it's normally 1%, but in this case, well, because I didn't say a number, we'll just say it's 0.5%. So we'll add 2.5% to that. But all trades now should probably be 1%. All right, let's go with that. So that's your first spike. If we get any more trades here, it'll be the 1%. And we're just about, don't know if that is below or not. I don't think that's a lower. All right, that probably is. But I missed it. That's so irritating. Simple press of the mouse, unfortunately, has led me not to be able to push the button, but that is where you would have bought. And you would have put your stop loss under there. You'd have bought in here. You'd have gone for that. Let's just assume that it was a 3-to-1 rather than a 4-to-1. It was a pretty clear opportunity to buy if you look at that RSI. So I am claiming that, but I won't claim the full 4.3. I'll just claim 3%. And we'll add that to the account because that would have been a pretty clear trade. And what do we got next? Right. We've got a spike. We're above the Bollinger Band this time. We're looking for a sell. There's the high. There's another low. Let's go for 1%. Let's see if it works. If it doesn't, so be it. Put a stop loss above previous high. Aim for the stop loss. Aim for the center line. So we're going for, let's just round that back up to 5%. That'll be fine. Somewhere there. Sell it. And we're targeting that guy. I think you probably would have moved your stop loss. Your stop loss got taken. Great. The reason I moved it is because we were at least halfway towards the target. Just unfortunately didn't play out. And okay, so we're up to the end of Monday. Let's just go into the next day. All right, what do we got? So we have got a gap lower. We're inside the band still. Bit of volatility. It's moving away. All right, that is definitely a spike right there. You could argue that that is divergence there. In fact, you probably would. In fact, I think you would definitely just buy that. Stop loss under the low. 6.8 on there. Let's see whether it works. Slow this guy down a bit. It's inside the, not quite inside the band yet. All right, it's dancing around. target at the moment, but really what you want to see is you want to get inside that band again. It starts to make it look like it's a little bit more comfortable. You'll notice as well that we've got a little bit of a ledge forming here, there. We want to break above that 470 ledge, and then you probably look at closing this kind of wide range bar, sort of fast move down here. And the longer it stays below that ledge, the more difficult it is to get through it. There you go. That's although you just created a pair of mirror bars there, that suggests a rejection. But we're back inside the bands, just about, kind of fallen over the bands rather than broken back inside. We've snuck in. But so far, so good. 20, 25 points, something like that. 30 points, you probably maybe stop loss to break even. Was that too early? Sometimes it's very difficult to tell. In this case, it looks like it was. It's just about missed my stop loss. Wow. Got lucky with that one. Got very lucky with that one. Well, sometimes it does work in your favor. Be cruel if it now comes and takes me out. That's looking pretty good. See if it takes it. 6.8. Fantastic. That was so close to being a 0. All right, so add that. So it's 23.3. If I've done my maths right, and I've added 6.8 to that correctly. That's not bad, is it, for a week? That is not bad. All right, well, let's just carry this on. Let's just see if there's anything else, and this takes us up to current day. Let's just speed this guy up. Wait for another one. It's getting close to that band, so I'll just slow it down a little bit. Okay, so there is a break. So we'll call that low spike 1. Bit of a retracement, that's what we want to see. Let's see whether or not we spike again below it. Doesn't look like it. Okay, we're back up towards the center line now, so we're away from there. Let's move this guy forward. All right, that isn't a close below the bands, but we are getting close to the bands, so I'll slow it down a little bit. And looks like we're going to attempt a break lower. No, it doesn't. Starting to slow down, getting towards the evening part of the session. So even if we do get a break below, I don't know if I would necessarily trade at this time of the day. Right, but that is a break. But we didn't take out the, you see, didn't take out the RSI. So it's not a spike. And that's the end of the day. All right, so we're moving into current day now. So we are below. There we go. So that would be classed as spike number 1. That's just below the RSI. That RSI is even lower, so I'd probably replace that with that one. And that is still part of the same move for me, really. So that isn't divergence. I want to see a pullback up towards the band and then another low, like something, well, yeah, like that. Pretty much. That's exactly what I want. Well, there you go. So let's go and target the median line. Stop above the low, get in here. 5.8. Looks good. buy it. Okay, there's a trade on. It's risked at 1%. So let's see how that one comes out. If we get stopped out, it might even create another spike. We could even get a re-entry. Remember, we only got to be right 1 in 4 times. And if we get 3 in a row wrong in a day, we just walk away. So what are we, 34 points in profit? Let's move that to break even. Let's collapse the risk on that one. Risk-free trade. Go on. Ah, you just gave me one by a single point a minute ago. Don't do the same the other way. Well, it's having a go. Yeah, there you go. All right, so that's another 5.8 to add to the account. 29.1% added to the bank. Not too shabby. All right, and we'll just run it to current and we'll see whether or not there was any other opportunity. Maybe speed this guy up because we're right in the middle. All right, so we're getting close to the bands at the top. It didn't quite break and close above, so can't really call that a spike. The price is trending higher at the moment. Again, another kind of pierce, but it didn't close. Another one, but it's still trending higher. So you'd imagine it's going to go. Still hasn't closed above it. There's your first, right. So it's got to probably be that. It's just above 70. Bit of a retracement. Good. Let's see whether or not we get the spike. That looks like a spike to me. That's really nice. No, it could overshoot this one though. That's the only problem. But if it does, we just get in again. But that is an 8. Maybe I'll just round that up to an 8 by giving it a slightly wider stop. 7.5 is fine. Sell. Slightly wider stop loss than before. And okay, got stopped out. So that was a 1% gone. But I still think we got a chance to get in on that again. If it doesn't work, then it doesn't work. Let's see here. About 5. Oh, cut that fine. Cut that really fine. But still in the trade. Move that to break even. Don't even need to bother. It hit its profit target. Happy days. I completely overshot it. Might even come out the other end. But that's added another 5.2% to the account. So that's 33.3%. That is a good week by anyone's standards. And I think we might be getting up to current. There we go. 7:15 on Wednesday, the 28th, and here we are at current, back inside the Bollinger Band. So after however many trades we made, plus 33% to the account is a pretty good return from a pretty simple strategy, I'm sure you'd agree. To find out more information, go and check out daxtrader.co.uk. To find out more about this charting platform that I'm using Sierra Charts. I've got service package number 5. It's a premium software. It does cost about $260 a year for a license. But it's probably the best one that I can recommend. I use this on a server, so it's really lightweight, very, very straightforward, very simple. You've got all kinds of good functions on there that you can use. I use that for my DAX analysis every day. If you want to go and create your own Sierra Charts platform, use my link at the bottom. If you go and sign up, then I'll also give you all the files that you need to make your platform look like this one, with all the toolbars and things at the top as well. Smash a like on the video if you like what we're doing. Subscribe to the channel for more videos as well, and come and check out the website regularly. It'll be good to catch up with you guys. All right, best of luck trading. Take care. Catch up with you soon. Bye for now.